The August CPI inflation reading just came out, and it came in as expected on pretty much every metric, and the lowest rate since March of 2021. Inflation is still high and above the Federal Reserve's 2% range, but the rate of increase of inflation has been going down, which is good news. And this is enough to cement a 25 basis point interest rate cut by the Fed next week's meeting. Year over year, we got 2.5% as expected. And then month over month, we got 0.2% as expected. And then for core CPI, which is minus volatile food and energy, we got 3.2% as expected, but the core month over month number was slightly higher than expected at 0.3% compared to 0.2%. This higher than expected core number combined, which is mostly pushed up by housing related costs, pretty much cements a 25 basis point interest rate cut and not a 50 basis point cut. It shows that inflation is still slightly higher than estimated, especially for core. Look, if inflation came out pretty much across the board lower than estimated on every metric, that would be a different story, and that would strengthen the case for a 50 basis point cut. However, in my opinion, this strengthens the case for a lower 25 basis point cut. That's why the market initially reacted negative to it in the morning. There's some recovery in the market right now because maybe the market's starting to interpret this as kind of Goldilocks. Inflation's going down, but not falling off a cliff, and economic growth still is pretty strong. So let's see how the day ends and trading ends. But the market is recovering as of midday. I also want to talk a little bit about Apple. Apple released their iPhone 16 lineup with AI features. This will be an AI-driven super cycle for Apple, in my opinion, and tech analyst Dan Ives thinks so too. He thinks Apple could hit a $4 trillion market cap in 2025 and a $300 price target for Apple. I think a lot of people haven't updated their iPhones in 4 years because iPhone updates have been very incremental and minor. These new AI features will be a paradigm shift, and a lot of people who haven't updated their phones will probably choose to do that this year. Probably about 300 million out of the 1.5 billion iPhone users will probably update their phones by 2025, being an AI-driven supercycle, according to tech analyst Dan Ives, and I kind of agree with him. I also wanted to speak to why I think this AI-fueled bull market will continue going on. We had Dell and Palantir get included in the S&P 500, and they're both AI plays. Dell has AI servers and computing, and Palantir has software solutions for companies, and both of these companies are key for AI and second derivative players, in my opinion. So this goes to show you all the hype around AI. Palantir also announced a 5-year extension partnership with BP, with oil company BP, which is pretty big. Palantir is huge and an undervalued AI play, in my opinion. Yes, Palantir has increased pretty substantially. It was about $5 at its low a couple years ago, but there's more room for growth. Bank of America just raised their price target for Palantir to $50. And then I also want to talk about Oracle earnings. Oracle smashed expectations with their earnings due to AI and with their cloud services. And Larry Ellison sees a renaissance in data center demand due to AI. So there's even more evidence that this AI demand and the productivity gains fueled by AI won't be stopping anytime soon. He thinks data centers could grow substantially. And then we also had Jensen Huang speak at a conference with Goldman Sachs saying that there's some tense situations and discussions with customers due to all the pent-up demand of Blackwell chips, because they want to get their hands on these chips as soon as possible, and it's creating some tension. That shows that the demand is still going on, and especially if customers are upset about that. So I don't see that necessarily ending anytime soon, and this is really good news, in my opinion, for artificial intelligence, for NVIDIA, and continued bull market overall. I still expect for the next 8 weeks some sideways trading. I think we saw the lows back in early August, but I think once we have clarity with the elections, we should see a substantial run up higher in the stock market. But until then, I think the markets will experience some sideways action and some chop. And then hopefully we'll get new highs into year end. I'm still expecting 56 to 5,800 for the S&P 500 by year end.